Hey traders, Raghee here, and in this free recap video, we're going to talk about crude oil and what does a 2x day mean. All right, 2x days. That simply means that we've moved double what the typical daily price movement range is. So some of you might have heard me refer to something called a DPMR. Now imagine having an ATR. I think most people are probably pretty familiar with an average true range or an ATR set upon a certain number of periods. Looking back, it kind of projects forward what the typical price movement range could be, hence average true range. Kind of simplifying it here. Well, imagine ATR's very cool cousin if those price movement ranges were based upon historical price movement ranges going back 6 months, however many periods that would be. That's a lot, right? So this is where you marry kind of ATR or this price movement range with the typical historical movement, and you get what's known as a PMR. Now, PMRs are helpful because every day I can wake up and say, hey, what's the upper end 68% of the time? What's the lower end and upper end on a daily? What's the lower end and upper end on an hourly, etc. So today, when I say that we moved 2x, or that today was a big move on crude, a lot of times people make that kind of statement not really acknowledging what's typical. So a 68% move on the upper end would be about $2. Today, we moved from a high of, as you can see here, 74.26 and made a low of 70.02. We moved $4 plus, right? So after a $4.24 move, that's why I say this was a 2x move. So it's not an arbitrary. It's not an arbitrary assessment. It's a 2x of the upper end, 68%. So let me mention something. This doesn't happen that often. You can see some large candles, but a 2x move is relatively rare. I mean, this is kind of normal. You know, you could see where we do put those kind of days on, but the idea is, do we know these days are coming? We don't. We actually don't. And I think another thing that tends to perplex a lot of traders is when this is happening, and the place that I think it was happening where it was most interesting was the daily time frame. And we could see a kind of a double top here, which does not mean we're going to have a 2x sell-off. It just means there's going to be an obstacle, a potential resistance level up here. I know I've got a high here, I've got a high here, but this is not something people see coming. Hence, it's 2x. If people thought this market was going to sell off, they would have sold it off, right? So what happened here? The Saudi Arabia news happened. What else happened? The Libya news happened. And these were both supply stories. What I mean by that is both the Saudi Arabia and Libya news were basically supply stories. In other words, we see supply coming on in June. The Saudis upped output by 500,000 barrels a day. Libya upped output by now coming back online. So it's an increase of supply, which inherently is bearish. And I think what really threw the market off, because gosh, you know, I was looking long and I thought, fantastic. We had an API number that kind of prepped the market for about, you know, it was actually 6.8 million barrel drawdown. We got 12, right? So this is incredibly bullish, one would think, until the market said, yeah, not bullish enough to overcome parts of the report that said there were downward expectations or downward recalculations for demand going into 2019. And then here come the supply stories. And oh yeah, we hate the tariffs too. And all that bad news took the market lower. And it's not that the equities markets was that much weaker, where equities risk aversion somehow kept crude lower. I mean, crude went lower on its own accord. Now, where are we and how do we trade this? Well, we are now in a buy zone. And this is something that I'll be watching going forward. This correction, I don't believe, and we didn't close at the bottom. We didn't close pushing brand new lows. I think that's pretty optimistic. And the fact that we are really selling off at sort of an unsustained rate, and we probably factored in, as the markets tend to do, too much. The markets tend to overreach when they're factoring good and bad news, but most especially bad news. So if the market's overreached and created a correction, this is where I think we really would, it would serve us well to stay on the offense and be opportunistic. And that's exactly what I'm looking at here. Let's stay opportunistic. Let's think about the fact that we have corrected an uptrend and look at where the path higher would be. I'll take a look at some of those paths higher in the premium video. Also, what's happening with treasuries, gas, the Russell, the NASDAQ, gold, the euro, and a whole bunch more. I'll see you in the next update.